Hi everybody, this is Joe Cusick from the Cusick Group. Happy Friday. Well, the markets have really rallied back after the fears that we had earlier this week when we thought that Deutsche Bank was going to be potentially the next Lehman. If you just took a look at the Deutsche Bank bonds, there really was no risk at that point as far as having a Lehman-esque type catastrophe. Now, that doesn't mean that everything's off the table, but if you looked at the situation, like what happened with the other domestic banks after the financial crisis, the biggest settlement that we saw was no more than 35% of the total market cap. So that's why that $14 billion Department of Justice number against Deutsche Bank really didn't make any sense. They now come back today. They basically have negotiated it down somewhere around $5 billion, which makes sense because 35% of any market cap was the largest we've seen. So Deutsche Bank, while it's going to be a hit, they had set aside at least $5 billion for litigation in the mortgage-backed securities situation. So we're going to wait and see how this plays out. Doesn't mean that the space isn't going to see some volatility. But the market, the S&P is right now up about 15 today. You're going to see a challenge of that 2170, 2180 level in the next couple weeks, especially if we still see small caps and tech leading. Tech took the market, put it on their back. You see the NASDAQ really just still running the big names, Amazon, Apple, Facebook, the FANGs, if you want to call them that, Google. Those have all been running. You're also seeing small caps. The small cap space has really been running well and continues to. You actually see that on the Russell 2000. You could see a potential challenge of 1262, which is that critical resistance level. If it breaks there, there could be some upside for small caps, which means that the shift that we're seeing in the cyclicals, you're seeing a move into higher beta stocks. That means that domestic stocks here in the U.S., those small cap stocks, could benefit from that. That also means that we could have some further good economic news coming out in front of a next earnings cycle. The last thing I want to note going into this long weekend is take a look at the bonds. The bonds, the 10-year, the yields are getting up above 160 again, and the 30-year, overnight, you started to see that the offers started to come in when the 30-year got to about 170 on the price point, and has basically been pounded down from there. If that kind of action continues in the bonds, that money is most likely going to start moving into and cycling into maybe some higher beta names, or in other words, into equities, and that would be a plus for the bulls going into next week. So we're going to keep an eye on that. All right, everybody, have a great weekend, and we'll talk to you next week. This is Joe Cusick from the Cusick Group.